Hello, everybody. Welcome to Tuesday. The S&P 500 was up 0.4% today, kind of snapping a 3-day slide that we've had here. Again, I think, a lot of this has to do with some of the rebalancings that's happening at the end of the quarter here. But tech stocks led the way today. NASDAQ was actually up 1.2%. They have been selling off, so we certainly saw a nice run from them today. NVIDIA, which has had a big 3-day downturn, had a almost 7% upturn today. Again, you're going to see when they do this rebalancing, some of the things that did the best selling off because, people are selling those pieces to buy the things that haven't done as well. But once that starts to settle, enough buyers come in at these lower prices to try to, grab NVIDIA after it's down 13% from its high, for example, to really, jump it up and keep it moving. We're heading into this, first half of July, which is the best half of any month for the year going back to 1928. And so, maybe this will be the catalyst to kind of get that rundown, and then boom, we get some motion up here. We're not that far from the all-time high in the S&P 500. Wouldn't be surprised to see us get there, certainly during this July period as we get into that, new money coming into the market as far as that goes. Consumer, survey was showing a bit softer. So consumers are thinking, the economy is slowing down a little bit and what have you. We'll see how that plays out. For me, when I look at what's going on here, if you just kind of look at the basics, if the Federal Reserve doesn't raise rates, and we don't end up in a recession, the market's going to continue to go up. I mean, that's how it goes. And yes, we can have volatility, quite a bit of volatility, like we did last year, and different things like that. But if you look at over the shorter to longer periods, as long as we don't have rates moving upward, as long as we don't have a recession starting, and we're in that zone, which is where we've been for quite some time. Actually, the last rate increase was in July of last year, so 12 months ago. We'll continue to move up as far as that goes. So, when things kind of dip, people are going to come in and buy those dips and continue to push this stock market to the upside, would be my guess. There's always that, kind of outside influence, international things that can happen that can kind of disrupt, these different thought processes. But just looking at what is here right now and kind of where we've been and how this plays out, this market's not going to, change direction, primary direction, which is what we look at, without rate increase or recession coming through. And earnings are still continuing to do well. So, we're not seeing either one of those happen at this point in time. Still talking about rate decreases, which is good for the stock market. Not really talking about recession, although there are some signs of a few things slowing down. We could get to a recessionary period, but probably not anytime real soon. So anyway, look forward to being able to see what's going to happen tomorrow, and we'll talk to you then. Thank you very much.